Hello, everybody. Welcome to the TraderMerlin Show. It is your Friday weekend edition. Cheers to everybody. Good week out there for me. It was a Four Roses kind of week, so I got a nice little frosty glass. So I'm raising a cheers to everybody out there. I hope you all had a great trading week as well. We're finishing this week on a nice exclamation point because of all that's gone on this week with regards to earnings. We now have a new kickoff for earnings season, which brought in a couple questions from viewers out there today. And then, of course, we had Netflix report a couple days ago, and I thought, you know what? Why don't we talk about that? And I talked to Brandon Wendell, and he says, you know what? I've got some good tweets and pictures and charts about this stuff. So I figured, what the hell? Why don't we just bring him on the show again? Of course, as our once a month tradition, we have Brandon Waddell joining us today. Brandon, how you doing?
I'm doing great, Merlin. Hopefully you can hear me there. I got my mic on, right?
Yeah. What are you on the floor of the NYSE? Isn't that's a legacy exchange there, buddy? What are you doing on the dinosaur?
Yeah, I decided to go ahead and put myself on the floor. This is probably about as close as I'll ever get to it. You know what? Since I trade a lot of futures, maybe I should be in Chicago instead. There
you go, right? And you just start yelling and get you. Well, you do have some pretty ugly vests, so you might blend right in there.
Hey.
Actually, guys, Brandon has become a very snazzy dresser over the years, and I love the picture of you is great. Check out that one. Look at that suit he's got on. Gorgeous suit from the conference last year, looking all dapper. Although I think you've lost a little bit of weight since then, buddy. Looking good.
Oh, thank you. Appreciate it. Yeah, I don't know. Maybe I have. Trying to, that's for sure. Trying to keep it off if I can.
Right. All right, let's talk about the FAANG stocks. Obviously, we had Netflix report earnings the other day. That's one of the major components of the FAANG stocks. Saw almost an immediate 14% drop. Today, a lot of people expecting it just to recover. It didn't. Now, surprisingly, the equity markets showed positive move today. But to me, it begs the question of how much damage do the FAANG stocks potentially pose for the markets, and I'd love to get your take on that one. We've got a bunch of people here with us today. They're all eager for that as well. So I got the wonderful pic. Let me show the picture that I made for everybody. There it is, the impact of FAANG stocks. Now, there's a slight typo in here because if you are really astute with it all, it's FAANGM. I believe there's an M for Microsoft, which is weird. You're seeing this old, mature, established company all of a sudden back with the young kids in the growth stock sector. So tell me what's your impression and thoughts on the FAANG stocks?
Well, it's kind of interesting. I mean, looking at the markets now, we used to see that it was a broad market move. However, there's been so much. I guess it was 2013 is when Jim Cramer first started talking about FAANG and coined the phrase, and it referred to at the time Facebook, Amazon, Netflix, and Google. But as you mentioned, it's kind of grown a little bit since there. We have FAANGM, so now including Facebook, Amazon, Apple, Netflix, Google, and Microsoft as the big players in the equity markets and really kind of driving the markets as a whole. So, it's just taking a look at the broad markets themselves. Let me go ahead and jump in here and. Actually, here, I'm going to go to the beach for a moment.
Yeah. Come out to my coast.
There we go. No. I'm still on the left or the right coast, not the left coast. But if I can, I'll go ahead and share my screen. And there we go. Got that.
Make sure it's the right one. This is a child, say family friendly show. So I don't see your screen. Fine. There it is. There we go. Okay, cool. Okay. So I got your NASDAQ 100 up.
Right. And with the NASDAQ 100, a couple things I wanted to point out. Obviously, one of the things we were concerned about is where the market's going to go. And, in the past, you've got broad market moves. And what I did was kind of interesting. I started trying to figure out, okay, what would happen if we were to take out the FAANG stocks? I mean, how positive are these markets really? Is it a healthy broad market move? Or is it going to be kind of is it driven by just a few individual securities? And what I found was, no, it's actually driven by a few individual securities. Another thing that I want to keep an eye out for is we've got some weakness going on right now, just in the NASDAQ as a whole. Mm-hmm. If you take a look, you've got right here the prices of the NASDAQ jumping up. By the way, I'm on a weekly chart, so I'm not even looking at a little picture. I'm looking at the big picture. And what is happening at the same time is you've got the momentum indicator down here. The RSI is the one I happen to be using. Let me bring that up a little bit bigger so we can see it. You can see that we're making these new highs on much less momentum than we had at the beginning of the year. And that's not a good sign. What we see typically is when you get something like this called divergence, the markets tend to turn to the downside. And one of the other alarming things that I noticed about this whole setup was just looking at the weekly candles this week versus last week. When you look at the NDX from last week, you had that big solid green candle. This week we gapped up, and then now the only saving grace is we didn't close lower. But what we have is pretty much engulfing candle on this weekly chart with that negative divergence. So again, going back to the FAANG stocks and what I see going on with those, take a look at this. This is the NASDAQ as a whole, right? And you're still with me, Merlin?
Yep, I'm with you. Yep.
Okay, cool. Got quiet there, making sure. So this is the NASDAQ itself. But what I've been able to do is here, now I've got another chart. As soon as it loads up, there we go. And this is now, and I'm going to get rid of the indicator at the bottom for a moment. This is the NASDAQ minus Facebook, Apple, Amazon, Netflix, Google, Microsoft. And what I can actually do here, it's kind of interesting. I tweeted this out earlier today, and I'm going to be adding some more things to it. But take a look at the difference between the NASDAQ completely and the NASDAQ minus those major heavy hitters. There's going to be a big difference in price. So I'm going to get that right there to January of this year. And look at where we are with all the big players, and look at where we are without the big players.
Crazy. Yeah, this is what I saw this morning. You tweeted this one out. This is a pretty awesome chart.
Yeah. And, well, thank you. The other thing that's even a little bit more concerning is when you go back here, SPX, this is the S&P 500 now, as soon as that loads up. And what I can do here is compare it against the S&P 500 itself. Now, this one was the most alarming because when you start doing the comparison, again, it's the S&P index minus those same FANG M stocks. Now, FANG M doesn't really kind of roll off the tongue as well as FANG does.
No, it doesn't.
Anyway, you can see that we got a problem. Going from January this year to current price action, you've got the the SPX is only up, it's down 1.25%, but the SPX minus those big players is down 141%. So the only reason why the markets are up where they are right now is directly related to just those particular securities. Mm-hmm. And it's just crazy.
Yeah, now obviously the scaling on the side's awkward because you're not going to be down 141%, but I think what's noteworthy here is the spread, and I brought up this point a few times, which is, I guess, the dangerous point to me, which is you have a market index that's being fueled by 5 or 6 companies. And with the NASDAQ, you kind of would expect there to be some imbalance because it's only 100 securities. But guys, remember, S&P is 500, or it's anywhere between 500 and 505 securities, depending on the two named companies. It shouldn't have this big of a differential. This should be more representative of the NASDAQ because it has 100 securities on the triple Qs, and the S&P should be a closer one because it means you have 495 other companies to help balance it out. What this tells me is that the vast majority of the S&P 500 stocks are really underperforming and in serious bad shape, and just those few are carrying it up. Would that be a correct assessment?
That would be a very accurate statement. I mean, basically what we're seeing, and we've never seen anything like this before. What I also did was, this was kind of interesting. I have a lot of little tricks that I pulled out here, and where is it? I found on ETF database website that they have something called the visual history of the SPX and the visual history of the NASDAQ. So you can go back, and what I decided to do was, right here, I went to 2007, and I looked to see, okay, what would have happened in the market crash in 2007 had we pulled out the major players? Because I wanted to see, is it just the major players that are driving us up and driving us down, or is it, again, the entire market? And this was leading in the housing bubble. So, again, I went into my charts, and which runner am I here? There it is. Keep losing which page. I got so many things open here. So anyway, I did the same thing here, weekly chart. And this time I took out ExxonMobil, GE, Microsoft, AT&T, and Procter & Gamble because those were the major players back in 2007. But here's the funny thing. You go back to 2007, and again, I got to compare it against just the S&P itself with all those, and then, of course, without. So I just wanted to see, okay, what is driving the market, and are we really in trouble if those particular 5 or 6 stocks drop? And the answer is yes, we are going to be in trouble, because when I went back to 2007, it's going very slow here. I apologize. I just have so many things open on my computer, I guess.
It will happen. No worries.
Yeah. Let's see. Well,
but I mean, I think the most important part I'm looking at in your charts there is it feels lockstep. You know, and it feels like it's just kind of, there's no real distinct separation when you remove those top 5 components from the S&P 500 back in 2007.
Exactly.
It's you would expect there to be some differential, but not like, 10, 20, 30, 40%, maybe a couple percentage points. And this to me would be a normal market, I would say.
Exactly. And this was total participation. And you look at 2007 all the way through, And you can see that, it was lockstep. So even if you remove the top performers, so to speak, the leading stocks from the index, you really didn't have much of a difference, because here in 2007, and I did the same thing, by the way, you can do NASDAQ back in 2000, same thing. If you pull out those top stocks, the markets almost didn't move.
That's what I was going to ask. I was going to say, did you do it on the 2000? Because then I would say that's similar, because in 2000, we had some .com companies which just went absolutely crazy. You had your Cisco, right there you go, Cisco, Microsoft, Intel. Those to me blew out that market totally out of proportion back then. And I haven't done this study, I haven't looked at it, but I was curious to see whether it looked the same. And as he's almost there, we're going to go a little bit further back.
So let's say you go back to I think it was like 1996
and it did.
or 97.
It actually really did, didn't it?
Yeah. And this is the market. Let's see. Yeah, that's the NDX with the without those. This is with them. And it's kind of interesting, because without the markets actually perform better without the leaders.
Interesting.
This is again, the red line down here, I should probably do a different color. It's there we go.
I have to say that's exactly the opposite of what I expected, to be honest.
Yeah, I was shocked too.
Because I remember Microsoft at the time was doing a split like every other month. It was just it was crazy.
Yep. Well, basically, it's Carol Baskin's fault. You can see my background now, right?
No, not yet. You got your chart still, but it's all Carol. It's always Carol Baskin's fault. I still have not seen the show, nor will I stoop to the level of Americanism and watch that show. I'm not going to do it.
Oh, I know. Well, what are you going to do? So there, I took off.
Is that your boyfriend out there? I think the chest tattoo is kind of similar. All right. Cool. So let me ask you this: since you've been around the block, you've seen this happen before, where we have certain securities that really just propel themselves higher and higher and higher. How are you maybe preparing or using this information where we have such a disconnect in a small basket of stocks versus the market? Does it make you feel like, hey, I need to jump in and be buying the FAANG stocks themselves because they're the strong lead horses right now? Or is it I'm having more pessimism because if those start to turn, then I'm in serious trouble? I'd like to get your take on what your perception of that information is.
Well, basically what we've been seeing on these charts is, again, that we're in kind of an unprecedented area where we've never had that a few stocks really driving everything. And I'm not individually trading those stocks, I'll be honest with you. I'm more of a futures trader. I like looking at the broad markets as a whole, but I can use this as a clue as to when the markets are likely to turn. And that's kind of what I'm doing here with this. And of course, everything just went to snail's pace, but I'm trying to fix, there we go. Once again, without those FAANG stocks, the markets have been very, very sluggish, which means that if I'm looking to see for overall investment purposes, if you're long right now and you're making money, you're probably doing pretty well. But as soon as the FAANG stocks turn to the downside, that's the death knell for the markets. Everything else is going to drop because it's already moved down so much. It's not that we're only up right now because of a handful of stocks. And in the history of the market, we haven't really had that happen. So with those few stocks give up, my belief is that the markets are going to crash. So I'm using them more of kind of a canary in the coal mine, so to speak, where I'm watching to see if those particular individual securities fail, then the markets will turn down. And that's really all it is. So I'm trading the futures on this and looking at the indexes themselves. Well, that's what's open and slowing down. Just realized what I had.
30 applications open, buddy. It doesn't usually run quick.
I know. I got 2 different trading platforms open in addition to all my charting and everything else, and I realized that that's what was going on. So hopefully that'll speed it up a bit. For
those that are curious, next week you have a couple things happening. You have on Wednesday, Microsoft will be reporting earnings, and surprisingly, you're looking at Microsoft with a $1.5 trillion market cap. Also on Thursday, Amazon will be reporting. They also have a $1.5 trillion market cap. And it's funny, if you go back just a couple of years, there was all this hoopla and fanfare about, oh my gosh, the first $1 trillion companies, they're going to be $2 trillion by the time you know it. It took decades to get to $1 trillion, and all of a sudden in 2-3 years they get to $2 trillion. It's going to be absolutely phenomenal to see these things happen. But they report earnings next week, so again, be careful with those. I had a question from a viewer, Brandon, and I wanted to see what your take on it. Let me bring it up for the viewers here. Heather says, do you change anything about your trading style during earnings season? Now, you just mentioned that you're not really an individual equities guy, more of an index and futures trader. Do you change anything about your style as we go into earnings season?
No, not really. I don't think it's necessary. I mean, if you have plans for that, then that's fine. I mean, one of the things I look at when it comes to earnings, and people kind of misplay them quite often, they think the play is just wait for the earnings and try to trade the big breakout one direction or the other. The problem is it's very unpredictable as to which way the market's going to move on those earnings. The better play, honestly, is to try to play some of the volatility and the drop in volatility. If you want a higher probability opportunity, you should look at the options, but don't sell options or buy options right before the earnings. If you do it weeks before buying options, you can actually profit no matter which direction the market goes. So, I mean, it may be a little bit late now because we're in the middle of the earnings seasons. But again, a couple of weeks ago, volatility in comparison to where it is when the earnings come out was relatively low. So what you try to do is you can buy a straddle. It's very simple. You buy a call, buy a put. Doesn't matter which direction the market goes. And if it goes up, great. If it goes down, great. Because the volatility rises before the earnings release, typically you're going to profit even if you're wrong in the direction. And in that case, with the straddle, you're not going to be wrong in the direction because it moves in either direction and you make a profit. So no, I don't change strategies other than with increased volatility or a security that's getting ready to release earnings, you might want to have a stop or be out of the securities on that particular earnings release. Now, with what's going on here with the markets really being dragged around by a few handful of stocks, I'm going to be watching my equity index positions based on those earnings releases of the individual securities that are driving the markets.
You know, to answer Heather's question from my perspective, it's a little bit different because I do trade equities today. Actually, I traded into it this morning. They came out and actually didn't come out with earnings, but they had an interesting pattern formation we talked about in yesterday's show. So I made a little bit of a trade on that one. Nice to end on a positive note. The only change I make during earnings season is this. I make sure that whatever I'm trading, I bring up an earnings calendar and say, when is it coming out with earnings? And just to Brendan's point, if I'm trading options on those, I have to know going into earnings season, they're usually going to be very inflated because of the uncertainty of earnings. So I just want to know where I stand with regards to the earnings announcements so you don't get caught with anything paying too much for options if I'm a buyer or knowing when to be a seller. Now, normally I will go out and trade the individual equities, so that's fine as well, but I don't want to be caught holding anything overnight in that case. So to me, that's how I will change, I would say, my style out there. So nothing... It's not drastic change. It's just a risk management piece. I just need to be aware of them because, as you guys saw with Netflix last night, it's been the darling, or the night before last, it's been one of the darling stocks that has certainly helped propel the markets up. And all of a sudden, 15% haircut in a very short order because of a slight earnings miss. No big deal. Brandon, talk to me about your think tank. I see you posting trades all the time. What any good setups or anything you want to share with our viewers?
Well, I mean, I do a lot of different setups. One of the things I've been kind of focusing on quite a bit is the spread trading, which is a little bit different than what most people are used to. Most people are trying to pick a particular direction in the markets and just go with that. And what I focus on a lot in the E-mini think tank is not just that, because we do some of those as well, but I'm also doing what is called spread trading, where it's actually kind of interesting. We're talking about how some of the markets are really moving the markets compared to the entire broad market. Well, that would be a spread opportunity. You can actually trade some of those securities against the entire market. And what I do in this is I'm trying to profit basically from the relationship between two securities rather than trading the entire, instead of trading one security by itself or trading for a directional move. So I just tweeted out a bunch of actually, let me do the sharing again here real quick. And there's a couple things I can show you and getting some comments there. It's kind of cool. Thank you, Patrick. He was saying that, kind of killing it in there we go, start sharing that one.
You guys might hear a very loud pop here very short. Oh, you guys hear that? I hope you guys heard that loud pop. That was, I have to share my screen real quick. Viewers out at home, that is the mosquito tennis racket. That loud pop you just heard was the annihilation of a mosquito. I'm proud to say you witnessed and heard a massacre of a mosquito. I'm so much happier. I'm going to have a nice sip of whiskey now just because that mosquito is no longer with us. Cheers to that lovely mosquito and his lack of blood-sucking abilities. Okay, sorry, Brandon, for that detour. Go back to you.
Totally fine. It's totally fine. No, what I was talking about is one of the things that we focus on. Again, we're also looking at directional plays. And just to show you, this is kind of interesting. I've been tracking all the trades that I've been doing for this month so far in the E-mini think tank and kind of get to brag a little bit here. But let's see. Am I sharing my desktop yet?
Yep, I see it.
Okay, cool. Okay, I just want to make sure you're still not looking at the racket. But what I did is I did put in, these are all in simulated mode for the trades themselves, but I obviously put them out before the market's open. And I've been tracking all the trading that's been going on in the E-mini think tank. Now, these are just from the idea pages. We do other trades in addition to that. But right now, we're up about 64%. I'm sorry, the win percentage is 64%. Trying to work on getting that higher, but you can see there's a lot of trades that never get taken. unfortunately, about a third of those, a little over a third. But the interesting thing is the rate of return right now, if you happen to have using full margins on a $50,000 account, you'd be up at almost 20% just for this month. And if you did a $10,000 account, as you can see, we pretty much doubled the account. So that's using the reduced intraday margin opportunity. So that was kind of cool that, again, I've been tracking all those and kind of following along and using the strategies I teach. I use my AA9 strategy and other ones in there as well that I've taught. But another thing that, like I was saying, that I focus on is instead of trying to guess which way the markets are going to go, another thing I can do is, and I've got a watch list here for this, I can do what's called intra or intermarket spread trading. So in case if I want to take advantage of, for instance, right here, you see crude oil prices were moving up. Okay, we've been in a nice bull run. They're starting to slow down a little bit, but they've been running since May to the upside. Well, you can go out and you can buy the crude oil futures contract, and that's going to give you a margin cost of about $8,000-9,000 overnight. Or you could do this. You could trade crude oil futures versus crude oil futures, and maybe we do CLZ 2020. So I'm doing the September versus December contract by doing this, and you'll notice this also moved to the upside, didn't it?
Mm-hmm.
Now it didn't move nearly as much. You can see we went from a -4 to about 0.5 basically on the negative side. So that was only 3.5 points. But during that time frame that moved to the upside, again, that was 3.5 points. So you're talking about a profit of $3,500, right? And this is running really slow. What's going on there? Anyway.
I'm sorry. Okay, so I love your analysis, but I'm dying over here. The chat's killing me. You guys are cracking me up. Mosquito lives matter, folks.
Mosquito lives matter. Yeah, they are. It doesn't kill fruit flies, huh?
It does kill fruit flies, by the way. This thing is awesome. I got 2 of them for like $19, and I love it. My dog hates it because he hears this loud snap every now and again, and he freaks out. But all right, so anyway, back to our
sidetrack here.
It happens. I was basically just filling time so you could type. I know it's tough to type and talk. Okay. Trust me, I know that pain.
So, since we're talking about animals, I know you probably can't see it. I got my background thing on, but there's a bunch of little lizards hanging out on my screen right next to me too. But I was going to show the screen, but I can't do that.
Oh yeah, Brandon, living right on the water in Florida, you have natural mosquito killers.
Yeah, pretty much. But anyway, what I was going to say is that the margin on this one, remember, I was looking at $8,000 for the margin before just trading a crude oil contract. However, if you do this as a spread, that was $3,500 profit during that exact same time with the $1,200 margin.
Mm-hmm.
So you can do what's called an intra-market spread right here, where you can pretty much almost look like the exact same chart, didn't it?
Yeah.
And you had the nice chart to the upside. I'm actually just got a question. What laptop do I use? I'm using a Microsoft Surface, and I've got 3 monitors I'm running, believe it or not.
Really? Nice.
Yeah. Yeah, so it's kind of crazy. People think, you got to have these special computers and all high tech and everything. And honestly, no, you don't.
No.
But
I mean, for what I'm doing, I do. Like with this, the broadcasting computer, because you need special video cards for all the video rendering and all that stuff. But yeah, for trading, it's actually a good point. A lot of people will be duped into buying something that has an amazing video card and graphics card. Guys, for the most part, trading doesn't require a lot of graphics resources. It's not that big of a deal. So. What you really want is you would want a lot of RAM, especially if you're using a browser-based application. RAM is key, but you don't have to go buy all these, monstrous gaming computers to run a trading application.
Yeah, absolutely. And like I said, I'm running multiple trading applications and my camera and, talking to you on Skype, and works out fine. But anyway, yeah, like I said, we focus a lot on these types of trades now. So I've got these spread trades. Just instead of spending tons of money by putting out the overnight margin, you can actually take advantage of these price moves with a lot less capital. So I can add in other indicators here as well. And, I use things like Bollinger Bands. I use my RSI, which I think I took off. It was on there earlier. But regardless, I actually tweeted several of these out earlier this week, and I found some opportunities on even 4-hour time frames. These are great on longer time frames. But what I'm doing is taking advantage of not the price direction, but just changes of the changes in price in relationship to another security. So right here, this is kind of cool. I've got the 30-year Treasury versus the 5-year. And what happened was we hit a buy zone right there, a little bit of a demand zone, and we rallied all the way up to a little bit of a supply zone. So you can bought the demand, sold the supply, and that was good for about $1,000. It went from, on the 13th at 6 a.m. to the 14th at 6 a.m. So 24 hours, $1,000. And here's the beautiful thing about this kind of a spread trade that people don't realize. It doesn't matter which direction the markets move. You can make money. So if I go out, let me just real quick bring up Paint if I can. I say real quick, but it's not moving that fast, unfortunately. But
here he is bragging about his Surface, and it's taking forever. I love it.
Nah, it's actually not moving.
Brought to you by Microsoft.
It's because I had too much going on there in the background. But again, when I'm looking at these securities, say for instance, I have one security that is, it's moving fine now. Two related securities. And what's happening is one of them moves up, but the other one doesn't move up as fast, or maybe it moves sideways. So what we're trading with the spread is simply this. It's the price difference between two related securities. In this case, the spread widened. You can see it was a narrow spread, and there the price widened. So what happens then is I can go ahead and sell the expensive security. So in this case, the blue one is overpriced, so I would sell the blue. And at the exact same time, I would buy the red. Now, here's the beauty of this. It doesn't matter which way the markets move. So this makes money in three possible outcomes. Number one, remember, we're buying the red, so if the red goes up faster than the blue, remember they were separated, and the blue doesn't move up as fast, it moves up a little bit. Notice the spread has narrowed, and you would have made profits. What would have happened here is you would have made more money on that long than you lost on the short. So you profit that way. But here's the other cool thing. What if they both move down? Well, that's fine too. You still could have made money if the blue moves down faster than the red. And same thing, if the spread narrows between these two, you still make money. Notice we went from a wide spread down to the narrow spread. Same as we did here, and we still made a profit. So we are what's called delta neutral, where it doesn't matter which direction the markets move. And lastly, I can make money if they both come together. So instead of a directional trader who only makes money if the markets move in their favor, as a spread trader, you make money three possible trend directions. The only way I would have lost is if the spread widened rather than narrowed. But here's the thing. When I'm looking at trading these spreads, I go back to some of the tools I'm using, Bollinger Bands. This is telling you when you're abnormal, and most of the time prices are what we call mean reverting. They simply go back to the average. That's it. Mm-hmm. So it's a high probability opportunity. Harrison just asked a question a little bit ago. Does joining the E-mini think tank give you access to the full education on spread trading? The answer is yes, it does. What happens is on the E-mini think tank, the way I did it is I recorded a bunch of live classes teaching the spreads, and those are saved and reviewable by anybody who joins the E-mini think tank. And then I do live sessions every week that build on what you learned. So it's kind of like a live application. I use a simulated account for legal purposes, but I allow you to kind of watch me apply the trading strategies that you learned.
Cool.
Yeah. And there's documents and stuff that kind of back it up as well to help you out. And if you've never traded futures before, I actually also have some videos I put out there for people joining the E-mini think tank that you can kind of learn how to trade futures if you've never done it before. But self-promotion here. I'm going to go say that one of the easiest way to get a hold of me, if you want to, you can DM me at Twitter. My Twitter handle is TraderBDub. That's probably one of the easiest ways to get a hold of me. You can also do bwendell.cmt@gmail. So if you got some questions about those things, you can go ahead and hit me up there. So a couple of opportunities there. Twitter, and you can always DM me there. Or there's my email.
Cool. Yeah, I've got it. I had it chatted on the screen already, but we've doubled me up over here.
Oh, okay.
Let's see, what else do I got? Brendan, do you own that company? No, I don't think Brendan owns the company.
No, I don't.
Let's see. Maybe you can throw out a recommendation on hardware. You know what? Actually, on hardware one day, Randall, I actually was going to have an IT professional, IT manager come on the program. I'm still working on that one because I have a lot of people who've asked me about that, specifically about computer recommendations. And, surprisingly, guys, I'll say it's much more basic than what you would think that you need. We are under this belief system that you have to have this amazing, powerful system. Not really true. I mean, look, he's using a Surface, and not that it's a bad computer, but it's not high-end, super machine, but it does the job just fine. Let's see. Brendan Valentine says, Delta neutral strategies are my favorite. I'd rather only take directional trade when trend continues. Where is the mean reversion on the ES? That's your 20 period. You using Bollinger Band for that? 20 period moving average?
Yeah, exactly. I mean, you can go out again. I can go back and share with my intra-market spreading going on there, and I mean, it's always the same thing. It's just reversion back to the mean. So if I bring up, let's see here, ESU 2020 minus ESZ 2020, this is what we call an intra-market spread. And with an intra-market spread, what happens is you trade the front month contract against the back month contract. And the reason why you do that, again, sometimes prices will move up. And because the front month typically has more volume than the back months, it usually moves further and faster in that same direction. But when they get too separated from each other, you'll usually see that mean reversion. So I happen to be on a daily chart here. And let's see. Didn't really have too many examples of it, honestly. Not on this one. Although right now we kind of do. You can see how we're way outside the norm. What should happen is that prices should return back to at least the average in the middle there. And I can even go to a different time frame to try to see this. Usually don't want to go too small when it comes to these time frames. Oh, here's a good example. Again, looking at a 4-hour chart, there were a couple of times right here where prices went a little too high, meaning that we were too expensive on the September contract compared to December. And what happened? Came back to the average. Or down here, we were too low and again came back to the average. So those are short-term opportunities which are mean reverting. And the nice thing about this is when you do these intra-market spreads, right now, what is the margin on this? About $13,000 for a contract on the ES. You can hold these contracts overnight for only about $500-600. Right. It drops the margin down that much.
Batista says, can you spread trade the micros? The answer is most likely, I'm assuming, is yes. Yeah. But then again, the price point is so low. I mean, if you don't have margin to trade just the regular ES, I mean, I don't know. I don't think you need the margin benefit from trading the micros.
Yeah, yes and no. I mean, yeah, you can definitely do the spreads on that. The other neat thing is they're actually going to be offering options now on those micros coming up pretty soon too. So there's a lot of ways of reducing your costs, the main reason why you are doing spreads is more safety. There's a higher probability of success, less risk, and lower margin costs. And with the micros, you already got a lot of that built into the micro. Mm-hmm. So it may not be necessary, as you were just saying, to do the spreads on the micros, but it is possible, absolutely.
Let's see. Harrison says, do supply and demand play a role in spread trading? And notice, and you're doing your analysis, it looks like you're just looking for real extremes using Bollinger Bands, etc. Is supply and demand a factor for you?
Yes, absolutely it is. When I bring back my screen here again, you'll notice that I've got two different types of charts on my screen. And I've got on the left-hand side, is it brought up yet? No.
Yep, we got it.
Okay, it is. On the left-hand side, I've got a line chart with Bollinger Bands. That primarily is what I'm using for what we call intra-market spreads, where I trade the same security with different months. On the right-hand side, however, what I've got is basically my core strategy, looking at zones, trends, all that good stuff. I still have the Bollinger Bands there. Let me get rid of the text for now. But I'm actually using, supply and demand, looking for those trends and opportunities out there. I think there was another one on the Aussie. Like I said, I tweeted a bunch of them out last week, and they actually came into play. Mm-hmm. Oh, wait, that's Intra, sorry.
I saw some of those. There were some great levels got hit. There were a couple. You were like, wow, I didn't even think that would happen, and nailed it. It was great.
Yeah. Oh, thanks. Yeah. No, I mean, it works. That's why I follow it. There it was, Australian dollar British pound. That was another one from last week where, once again, I was looking at prices coming down below the Bollinger Band, and this one actually, we didn't quite get to the demand zone. As you can see, the demand zone was just a little bit lower, but we did have what is called a positive divergence. So I still use all the same kind of tools, and we rallied up. And as you can see, we're starting to flatten out right now, right in the area of this supply zone. Yep. And we're a little bit shy of that. Honestly, that's not even a good supply zone. That's a reaction to what was back here, which was supply.
Right.
We had a drop-based drop right there. So the answer simply is yes, I do use my supply and demand the same way I would on any other type of chart. But I don't do that on the intra-market spreads. And the reason why I don't is on the intra-market spreads, it won't look as good. But the intermarket, it's great.
Okay, last one. This is from Crixus Reptilian, since we have lizards on your back patio. Please ask Mr. Wendell why the 50-minute breakouts have been failing on the equity indexes. Look, I don't know if we could go and say exactly why something isn't working. Certainly, there's times where you get chop and a lot of uncertainty in the markets. And when you have a lot of uncertainty in the markets, you get whipsawed action. So a lot of times breakouts will come right back down to the origin. So that's my 2 cents on it. I don't know if you have a perspective on why maybe a lot of these breakouts are failing.
Well, there's just higher volatility right now. The market, the main thing is when you look at the markets from a bigger perspective, we don't have a strong trend.
Right.
What's happening right now overall in the markets is we've got a lot of indecision. When you take a look at the big picture of the NASDAQ, that's the only equity index that really went into weekly bullish territory. The rest of them stayed a little bit bearish. We haven't made higher lows and higher highs. So there's a little bit of indecision going on in the markets. They're not sure which way they want to go. And until we have a strong trend developing again, it becomes much more difficult to trade those types of trades, those opening range breakouts. So we've been seeing that every morning, for the most part, the markets have been a little bit confused and getting a bunch of choppiness and reversals. So when that's happening, it's best to just sit out and wait for different strategies that work better in that type of market environment. So the thing you got to remember is a good trader should have a lot of different strategies based on the market environments that they're working with. And if you don't have a strategy that's for that market environment you're currently in, guess what? Don't trade. That's pretty simple, right?
Yeah.
It's like walking around the house with a toolbox. You're not going to use the same tools to fix a leaky faucet that you would use to fix light bulbs or to fix a creaky staircase. So you got to have the right tools for the right time. That's what it comes down to.
Great question from Joseph. And we talk about the different things you're looking for in specific futures contracts, etc. He says, which futures contracts are best for spread trading? I know you generally stick with the very liquid, the big ones, right?
Well, yes and no. I mean, there was something interesting that I did the other night in a class was going out to cftc.gov. Oh, that's right. I'm not sharing my desktop anymore. But if you go into the
you are,
CFTC
I can see
website,
it. But if you want me to hide it, I can hide your desktop for you.
No, that's fine.
Okay.
No, it's fine. The porn's on the other screen. So if you're going to the Cumulative Traders Report, okay, I can never remember if I was sharing it or not. But if you go into the CFTC reports, what you'll notice is there are certain securities that lend themselves better to spreading. And the easiest way to figure this out is to see what the professionals are doing. So, for instance, if I go to the CME website, and not the CME, I go to the CME section, and let's just look at the NASDAQ. There we go. So we go to the NASDAQ, and I go down to the E-minis. What you'll notice is the total open interest is 233,000 contracts. There's only 34,000 of those contracts being spread, though. So what does that mean? It means that basically about 1.5% of the open interest is being done as spread trading. That's not a lot.
No.
And the problem you're going to run into is when you try to do spread trades, the back contracts, the further contracts that you go to, are going to have worse spreads, meaning the bid-ask spreads. So you're going to be giving up a lot of profit potential by getting into those trades. However, you compare this to, if I go back on the CFTC, the Commitment of Traders Report, and go to agriculture, and we'll just look at, wheat's the first one that shows up here, so I'll just use that. You've got almost 400,000 open interest. Now, take a look. On the swap dealers, 9,400 contracts being spread, no big deal. 82,000 managed money, though. Wait a minute, what's going on here?
Mm-hmm.
There's actually more spreads going on than individual shorts or longs. So, I mean, when it comes down to it, if I bring up a calculator, because I'm not going to do the math in my head.
Come on, you can do it.
No, I can't. So anyway, what do we have here? 94.23 plus that 82,182 plus on the other side we got other reportables 20,982. So you've got 112,000 spreads. Divide that by 389,500 total open interest, and you got almost 30%. So that's a good security to trade as a spread because you're not the only person doing it. As you can see, the professionals are doing spread trading, and a lot of it, especially the managed money. These are CTAs, commodity trading advisors, people who are getting paid big commissions to manage professional portfolios in the spread market. So you want to find securities that are doing a lot of spreads. And Joseph asked, so the smart money does spread trading? Absolutely it does. Remember what I just said about spread trading. Instead of making money on the directional move, where you'd only have one way of making money, you pick the right direction, here you make money 3 different possibilities, 3 out of 4. that's a much better probability for success.
Yeah. I think the key there is, we've talked about this in the past many times, I guess the selling point is you have more probability of consistency because you're taking lower risks, but you're not also getting the gigantic rewards, right? That's the key. You're not getting grand slams with this. You can every now and again, but that's not your desire.
Right. Dollar-wise, you're not. But here's the thing. Rate of return, actually you can get better returns. That's the crazy part about it. People don't realize, but with rate of returns, you can usually get much, much better rate of returns doing spreads than you can on directional trades if it's done correctly. Yeah. So, you actually can make a lot of money doing this, but dollar-wise, it won't be nearly as much. Again, if I was doing that crude oil trade, instead of doing $8,000 for an overnight position and making $30,000, you'd be putting up $1,200 of margin and maybe tripling your money. So again, rate of return 300% versus, I don't know, maybe a 40% rate of return, but the dollar amount's not going to be as high. But spreads are awesome, and they're something that the professionals have been doing for many, many years. It's just not something that many retail customers like ourselves know about or have been able to do.
Right.
So I'm trying to change that.
You can do it. Well, if you guys want to know more, go to @TraderBDub on Twitter. You can message him there, and he'll get you more info. One last comment here from Tom, which I think is a good one. He says, based off of Brandon's S&P without the FAANG chart, I looked at a bunch of sector ETFs, and they are not way down as the chart would have predicted. Did the high prices of the FAANG stocks distort what we saw on that chart?
It probably could have. I mean, again, I got to do a little more research on this. The first thing that just jumped out at me, the fact that taking out the FAANG stocks really sunk the S&P altogether.
Yeah.
And I mean, I'm going to have to do a little more digging into that. I'll probably, like I said, I'll usually post some of that research up on Twitter, maybe even do a paper on it or something, post it on LinkedIn. We'll see. With a link on Twitter, of course, so you can find everything there. But I want to see what's going on with the overall sectors. I mean, in the past, I used to write what they call lessons from the instructors. They changed the name. But I wrote about some of the things you could do is compare the sector rotation to see where we are in the overall market move and when there's likely to be a drop. And one of the ones I was looking at was, and I'm going to explore this as a spread trade potentially, the consumer staples ETF versus consumer discretionary ETF. They're kind of at the opposite ends of the spectrum, where the consumer staples are the best performer usually as defensive play when the markets are getting ready to crash. And the consumer staples are, hey, we got to go out and make money. The market's going to rally. So comparing, I think it was, I can't remember what it is right now. It's FX something. I can't remember what the ETF is, but, or I'm sorry, XL. It's XLP and XLY. That's what it is. So comparing those two against each other can also give you an idea where the markets are more likely to be headed.
Let me. I'm going to share my screen. You won't be able to see this one, Brandon, but I'm showing you guys the components here, the weightings of the NASDAQ 100, and you'll notice the problem, and this is why you're seeing that separation, Tom, since you did the research on this. This is the NASDAQ 100. Notice that the top three companies there, Apple, Microsoft, and Amazon, those three companies represent over 33%. It's close to 35% of the NASDAQ 100 is represented by three companies. That's why it becomes distorted. Now, you'd think it'd be better with the S&P. Well, here's your S&P, and look at our FAANG stocks. There are the top 6 companies. You've got Alphabet, Class A and C shares. You have Facebook, Amazon, Microsoft, and Apple. Let's see, I'll try to do the numbers in my head. That's 6, 12, I want to call that 17, 18, 19, 20, 21, 22. That's about 25%. So just these 5 companies represent 25% of the 503. That's nuts. That's why you're seeing it become so distorted. And yes, it does have to do with the price, but as the weightings become more significant, these elevated moves that we're seeing happen in those few companies further jacks up the price. Now, again, this is a total double-edged sword, because what do you think happens if all of a sudden something happens to Amazon? There's a hack or a package bomber or something is out there with Amazon packages and that stock drops 30, 40%. It could happen, becomes very dangerous. And this is the peril of the market that we're in. You've got a Fed-induced inflated bubble here, and who knows when it's going to come crashing back down. I feel at some point it is. Obviously, my bets are on that it is going to break down. Of course, with my options trade, it didn't do so well. I had to start I didn't sell it all out. That was actually a question that came through, is how am I getting out of my options trade? Because it's so big, I'm slowly unwinding it, because I could move that market by unwinding 460 put options on the S&P at once out of the money. Yeah. All right, Brendan, any last-minute pieces here? I know you've had a pretty active week. You're always out there tweeting from your think tank, and I know you have what is it called? A signature series coming up, don't you not?
Yeah, actually Monday morning I'm supposed to do another signature series Monday through Wednesday again. So I'll be busy doing that. Yeah, absolutely. It's keeping busy, trying to stay safe down here in Florida. Got my mask. I don't know where I put it. I have it around somewhere, but I tweeted that one out too. I got an actual really nice bull and bear mask.
One. That's cool. He's moving on from bow ties to face masks.
Yeah, same company produces them too. It's kind of fun.
Oh, that's nice. All right, Brendan. Well, thank you so much. I appreciate you coming on. Hope you have a fantastic weekend down there. Do some kayaking, be safe, and I will probably see you on in a few weeks, my friend.
Absolutely. You guys take care, everybody. Thank you for having me back.
Always a pleasure. Thank you, Brendan. All right, guys, that was Brendan Wendell coming live and direct from Florida. That's right, giving some insights into the Fang Stocks. It's going to be really interesting here this earnings season. I don't think you'll see the same thing that happened with Netflix happen to Amazon or Facebook. I think actually could take a beating here because of the loss of ad revenue. But Amazon, I think, is still going to continue to motor on. You're seeing more and more people use it. I mean, I'm guilty of it. I got boxes of Amazon stuff all over the place because I shop there so often. So I don't see that one taking too big of a hit. Microsoft probably doing well. So the real weakness will probably come from Facebook and Google. But we'll have to wait. Those won't come out for another few weeks. Again, next week you do have Microsoft on Wednesday, and you have Amazon on Thursday. Okay, cool. Let me just real quickly run through what the market looks like for next week, at least for Monday, give you a little heads up as to the economic calendar out there. Here is your economic calendar for July 20th. You'll notice something strongly missing from this chart that's anything to do with America. It's pretty much all international. We have nothing for the U.S., and none of these announcements are really that critical. So I don't think we'll see anything dangerous with regards to the economic calendar. And earnings front is also very quiet. If you guys can pronounce the second name there, you get extra points. That is such a crazy name. You have IBM, you have Cadence Designs, Equity Lifestyles, Halliburton, and Logitech are some of the bigger names reporting tomorrow. And then you have that name, number 2 there, which I don't know if I could pronounce, Konin Klitschke. There you go. Koningskliki. It's the Scandinavians and their long J's and K's. Just goes crazy out there. All right, so that's what's happening for tomorrow's session, for Monday's session. Hopefully, you guys will have a great, fantastic weekend, and everything's going to go great for you, and then we'll be back on Monday. I think Monday, I have an interesting week. I'm going to have Tilly Allison on Monday. I'm going to have Gabe Velasquez on Tuesday. So people are asking for me to get Gabe on the program, so why not? Let's have Gabe Velasquez on the program. And then I will have Sam Evans on the program on Wednesday. So Tilly, Gabe, Sam Evans, and maybe I'll have a guest on Thursday or Friday. Right now, we're open. So anyway, hope you guys enjoyed today's show. Again, if you like Brendan Wendell's comments, if you want to give some feedback, do me a favor, click the like button. That always helps me out. Comments that you leave down below the YouTube videos help as well. You can also go down and check out the podcast for those of you who are on iTunes, or if you had podcast friends who are looking for new content, point them our way. Just tell them to go to TraderMerlin. You can actually, I think you can even talk to Spotify and just say, hey, play TraderMerlin, and they'll actually start playing the show. Didn't know it could do that, but I guess you made it big time when that happens. All right, everybody, that will do it for our weekend edition. Cheers to all of you. I'm ready for a refill. Have a fantastic weekend. I will see you Monday.